All right, we've got a broader rebound, of course, in the market. That includes many semiconductor-related company stocks, this after hitting a fresh 52-week lows. Our next guest says still hard to tell where things are going to bottom out given all this volatility. Joining us now is Bernstein's chip analyst, Stacy Rasgon. Stacy, always good to have you. I'll start with what I would assume is a question you're probably getting from a lot of clients. I mean, it's not, we know that chips themselves aren't getting tariffed, but it's so many of the things they go in, whether it's a phone or a computer or a server are. So where does this all end up from us? I talked to one CEO of a big company that our viewers know well yesterday, said, no way I'm going to be able to give guidance.
Yeah. It'd be very interesting. By the way, earnings season starts in another week or two. So I can't imagine anybody really wants to stick their neck out in this environment. And you sort of alluded to the issue, like the direct impacts on semis are relatively easy to calculate, but they're not very big. And as you mentioned, they've been mostly exempted. And frankly, we don't import a ton of raw semiconductors into the U.S. anyways. Most semiconductors enter the U.S. inside other things, inside PCs, inside smartphones, inside servers. And so the bigger risks are indirect, demand destruction. Broader macro, I mean, if we go into a recession, semis are cyclical and pretty macro-driven, and they tend not to do well in poor economic environments. So those are the kinds of things that are very difficult to size, both for me as well as for, the companies themselves. And visibility is going to be very, very low right now. But you can calculate some of the potential impacts. So, for example, PCs and smartphones, I know where that stuff's coming. I can calculate a rough tariff. Before the added 50% on China, that tariff would have been roughly 40% probably on PCs and smartphones and those sorts of things. There are a few silver linings, by the way. So one of the big concerns that people have has been AI servers and this worry that, oh my God, do the U.S. hyperscalers, do their CapEx budgets just have to go up 50% or 30%?
Yeah, you just anticipated my next question. So what's the answer here? What's the cost going to be in the data center, for example, potentially?
Well, as it turns out, a lot of the AI servers, as well as some of the other compute hardware that's used in the U.S. actually comes from Mexico. And there's been a carve-out for the USMCA, the U.S.-Mexico-Canada agreement. My read of the situation suggests that stuff coming from their AI servers and things that are put together in Mexico are tariff-free. And that mixes, it's already probably 60% of the U.S. volume of those types of servers is coming from Mexico. Some of the suppliers like Foxconn are already building more plants in Mexico. My guess is that mix goes up. And so there are some workarounds. There's some other things, like if the U.S. content of some of these devices coming from other places is above 20%, then the U.S. content would not get tariffed. And so you could imagine ways to increase the U.S. content of things coming from other areas before they come into the U.S. And so there are some workarounds, and I'm sure everybody in the industry, they've got their smart people trying to figure out how to navigate all of this. But it is uncertain. It's going to be a little while before we know. But it's not necessarily doomsday, hopefully, at least on the AI server front yet.
So what about long term? I mean, everything you're talking about is like in the next few quarters. Long term, if you think the future is still Gen AI, how much damage has been done to these stocks from a valuation perspective? And where would you buy first?
I mean, valuations are down across the board. In fact, there's plenty of stocks that are down even more than stocks like NVIDIA or Broadcom. So it's not necessarily just a Gen AI thing. I do think, though, over the long term, the Gen AI and the broader trend toward artificial intelligence is still a real trend. And if anything, it's going to be more and more important. And so I do think that trend is there. What we need to see over the near to medium term is, does a lot of this uncertainty cause companies, both in AI and in semis, and frankly, like everywhere else, does it cause capital plans to be reevaluated in the midst of uncertainty? I don't know. I think there'll be more volatility in the near to medium term, clearly. But over the long term, I think AI is still real. I think it's still really important. I think it is still a priority in the U.S., and I'm still pretty bullish long term on the general trajectory and prospects for AI.
All right, and we're going to keep a close eye on those servers from Mexico. That's I know you wrote about it yesterday as well. Stacy, thank you. We'll be checking in again soon, I'm sure.